Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for January 12th, 2022. So today is really the third day of continuation from the oversold conditions where we'd made a new 10-day low. We've rebounded 1 day, 2 days, a third day up, although this is taking on some doji-like qualities. You'll notice that the daily range is diminishing in each of these 3 days, so getting smaller. And today the close was slightly lower than the open. So if anything, this feels like we're in the midpoint of that 10-day range. We're pretty much in the middle of it. Strong move available in either direction. And so I've made a tight risk box around the close. Ready for a breakout in either direction. I'm going to talk about hybrid trading in the frog box and what to do about gaps based on a good question from Glenn. After we get into the lesson. The lesson after the reports. The 3-period haul is still strongly up. The RL30 dipped slightly. The PSAR is still shaping downward, so cautiously optimistic to the upside. I really want to see it get above today's high and the high of the dragon, or the upper skin of the dragon, before I really adopt a favorable attitude. If it gets through 474, then the upside back to the 10-day high is reasonably there. But there's an increasing amount of resistance overhead that's keeping the man down. So we'll be mindful of potential retracements for tomorrow. If it breaks down out of that zone, it'll test the daily low, which is also the bottom of the dragon at about 469.5. There's the 2.5% sell off at 468. That's 2.5% sell off from the high. And that's what a 5% sell off looks like, which was what that last little piece was. So yeah, the daily low, the bottom of the dragon, the 2.5% sell off, the Bollinger Band mean at 468, and then really the belly of the RL10. So the belly of the RL10 is where the PSAR will flip to if this upward movement continues. So that actually represents the reasonable stop for a swing trade that started either today or yesterday, right? So that price level looks to me to be decisive at 466. So if it drops below 466, then I think you really have to have a downward bias, and then you're looking at this kind of a move, and really the same kind of weakness that brought us over to here and all the way down here. So to me, yeah, 466 looks like the decisive play. So perfect critical state, ready to break in either direction. When you're halfway in the middle of that 10-day range and you got higher lows, this is why I do have some optimism here. The upside move is supported by the idea of rising lows in the RL10s, and as we talked about yesterday, if we got an up move today, that the RL10 would reverse and start to move up, which is what we got. So this is actually forming a Kata 2 style of a play. And then really, if we're playing the regression or the price crossing the dragon, a price level of 474 would be very positive indeed. And then we would look tomorrow, the crossing of the PSAR would be approximately at 478.5. You just got to project this timeline down. Then you come over one more day, you read up, That's where that PSAR will be tomorrow at about 478.5. That's when you really get the positive move. But if this holds, the fact that the dragon it hardly rolled over, I'd be ready to get long at 474 on a swing. I like this. I like this price level as a breakout to the upside. 474, I think, will be decisive. All right, in the sectors. So the S&P was a little bit stronger earlier today. Let me try standby. All right, so the S&P was in the middle of our index performances today at 0.27. The Qs were stronger at 0.4. Emerging markets had another very strong day to the upside of 1.6. Diamonds lagged a little bit at 0.11, still in the green though. Underperforming and in the red were treasuries at minus 0.38. The Russell was the loser of the day at minus 0.74. So let's look at the upside sectors. Marijuana 0.36, tech, consumer discretionary 0.66, blended commodities 0.8, materials 1.0, oil exploration. So the energy, that portion of energy still strong at 1.05. The FANGs, another really good day, 1.25. You know, their market cap is so large when it moves that much. That's a lot of money being put into tech. Lumber 1.27, wheat and precious 1.28. Oil at 1.3, blockchain 1.45. Mexico 1.7, the other lumber 1.8. Bitcoin and the Bitcoin Trust 2.5. Brazil 3. Lithium batteries 4%. Ethereum 4.5. The large cap blended crypto 7.5. 7.5. The rebound came today in U.S. steel at 5.37. TX, the steel company, 4%. Tesla and Cliff, the steel company, at 4%. So we talked about that yesterday, to be prepared for that kind of move, and we saw that today. Microsoft, a strong day at 1%. All right, to the downside, sectors that were weaker. Energy itself was slightly weaker than the S&P, although we did still see residual strength in oil itself and in oil exploration. So some of the, you know, the commodity based was very strong. Finance lagged a little bit at 0.07. Commercial real estate 0.06. Agriculture, consumer staples 0.04. Clean energy basically flat. VXX -1. Moonshots 1.5. ARC Innovation 2.78. Boy, Kathy Wood's just getting crushed in the ARC. XBI, the S&P Biotech 3.1, and then ARC Genomics -4%. I mean, she made a call today, not worried about inflation, but rather deflation. It just feels like she's lost the bowl. You know, her funds are off 50% from their highest high, which is still, she's made people a ton of money, but boy, the shine is really off the rose there. right, targets that lost today, some of the financial disruptors here: PayPal, Squarespace, Coinbase, all down big. John Deere finally gave back some at 1.13. Aluminum was the only metals company that didn't crush it today, minus 0.5. Virgin Galactic, minus 0.16. So to me, this is still the story of tech and energy. I would say the energy is feeling like it's fully valued. You still had oil exploration and oil itself up strong, and Devon Energy up strong, but the sector spider was down. So maybe we're seeing a little slowdown in that sector. I would be careful to preserve profits. But meanwhile, technology and materials are especially looking good. You know, XLK, XLB, and then all the direct steel plays. So that's kind of where I go. Emerging markets is also really interesting to me. Emerging markets and Brazil, or Mexico, I would say, feel interesting. How much more is there in Brazil? I mean, that's rallying from wickedly harsh sell-offs. So I don't know how much more is left in there, but there may be another momentum play intraday on that one. So that's worth looking at. All right, we'll go to dashboard number 1. Bullish normal, overbought mostly, with a above average on the 10 and the 30 day. The swing, look back. The risk Z still showing favorable upside potential. It feels like it's still trying to make this upward play, but the downside play with 2 scoops is still there that we got to be worried about. Critical state in the index. The strength now in Asia, less Japan, and Latin America now cause them to join emerging markets in this potential overreaction to the downside. So once again, this is not an automatic short, but what it does represent is a market that is starting to become a little overbought on these what have been weaker plays, right? So the rebound in them is now starting to become a little vulnerable. Let's see if I can find that on a chart here. We'll look at EEM. Yeah, so this is what that over, what that alert for the overreaction play is. Now you notice that in emerging markets we have this horrible sell-off. We had a bit of a stabilizing rebound here, which is nice. And then all of a sudden, out of nowhere, we get this extraordinary 2-day move that has pushed the boundaries of Z3. That's halfway up the stack, right? So the argument here is, when you have that kind of an overreaction play, the logic is that this thing may have moved too far too fast, and that this surprise move now becomes vulnerable. So the way we would set that up is, if it started to sell off, then the first support level that you see is all the way back inside this support here back at 48. So that's like a 4% move to the downside. Yeah, we know it's possible that this thing could continue back up and break out of this box and then get up to this resistance level around 52. But what the overreaction signal is warning is that the vulnerability to a downside move is certainly there. And so what we would wait to see is, if the S&P starts to weaken tomorrow, and if emerging markets are worse than the S&P, then that becomes your go-to to short in the indexes, right? The other one was Latin America. So let's take a look at that. That's going to, I think, look the same way. Again, that has that surprise push to the upside. And it's a little bit easier to see now that when you got that exhaustion move to the upside, like in the last two cases, these really show it well. That after those things finish their upward push, if they can't maintain that momentum, then that becomes very vulnerable to the downside move, as you can see. I'd even go back an extra one and say, this is a pretty good example. Huge downward trend, periodic dead cat bounces. When they fail, that becomes a strong downside move. So that would say be on the lookout for a move back to 23. And then EPP, Asia less Japan. Let's just look at that real quick. Yeah, same thing. And what makes that one even more compelling is that this price level that it's gotten to has been a weak area twice already. And there was, when it couldn't go any further, there was weakness in here. And then there was a weakness after this one all the way back to 46. You could even argue that overbought overreaction move to the upside also happened here, and then the big sharp sell-off. So when I am seeing this kind of a signal pattern, this doesn't automatically get me short, but it does alert me to the fact that if market weakness begins to come in and that starts to collapse, then that becomes the first place that I want to look to get short. Let me know in chat if that was helpful. Emerging markets would be my first one to look at, by the way, because that one is already is below its 200-day moving average. Okay. All right, moving on. Handful of dojis today. Plenty of auto framers still in play. Nike at 6-1. United Health 3.7-1. Microsoft, I think, is still a deal at 3.2-1. And it had a pretty strong move today. Not the best, but it was a solid recovery day for Microsoft. In the ETFs, noticing a handful of dojis, handful of overreactions. Auto framers. These overreaction shorts are similar to what we just saw with EEM. That's the EEM piece right there. Brazil is in an overreaction condition, as is Latin America. As silver could be vulnerable. Asia less Japan, and these are all the internationals that have been lagging, but which have had short-term dramatic price improvements. Now those all become vulnerable to weakness in the market. Here's your auto framers. With your framing data, if you're setting those up. My risk is the recommended mechanical risk that you should consider using if you're swing trading this technique. The daily squeezes now include the S&P. Real estate looks very attractive. And even treasuries are postured as a flight to quality if we saw weakness in the indexes. Fall is still dominating in the four seasons. I'm liking US Steel and Caterpillar in here. And of course, the two energies. You see energy is the strongest of the ETFs. Emerging markets has had a nice little bump and run here. finance also strong. US Steel making a play to the upside. Ethereum and Tesla also joining it on the 2-day strength column. But otherwise in the energy sector, Chevron and ExxonMobil. This little bounce here in Latin America, Brazil, I'd even extend that to emerging markets. Mexico has been really good anyway. That may be the safest non-US play right now. We've talked about it, but haven't really emphasized it that much. I want to go take a look at it now. Yeah, you can see the difference in Mexico and Brazil. Mexico. And you know, that's at all-time highs. So if you were going to play a non-US market, I don't think it's too late to get into that one. I would start it off as a hybrid frog and then keep 1/5 of the day trade position if it earns you money in that long side direction. But I like the fact that it has, after consolidating for 10 days, it has now begun to its next leg up. That's pretty attractive right there. All right, let's take a look at the trades from the gang today. I want to commend Michael for specifying the rules that he's trading so that when we're looking at his feedback, when we're looking at the trades he's taken, we can measure his performance against his intention. If you're just trading based on intuition, there's not much feedback we can give you other than just to make observations about standard patterns that you may or may not be taking, but we can't really evaluate your judgment or your intention, whether you're rules based. So my recommendation to you is going to be, again, name the patterns that you are trading. If you're trading our patterns, name the patterns. If you're not trading our patterns, then you can post your charts, but there's it's not going to be as effective in terms of feedback. All right, this is Tom trading Joe's rules. I'm going to ask Tom to make those circles smaller so that we can see with more precision where those things are happening. So trade one, impulse buy before the first bar even closed. I think this is probably, he's looking at a gap up and a Z3 breakout. So he's looking to front run that and then rolls over and then takes the money management stop for minus 0.9. I'm not offended by that. But when this entire cluster fails, and now you see the PSAR flip happening here, see if Joe's rules allow you to trade the PSAR break coming out of this failed move. This would be the natural place to get it, just as it's crossing the southern skin of the dragon. The 1, 2, 3 exit on that one. So if you got short here, the 1, 2, 3 exit that's indicated would be here. That's actually a place where you can do the 1, 2, 3 entry. Or if you wait for the price to take out the PSAR, you end up getting it where he got it. And he's playing the southern skin of the dragon as his risk box rather than the full move to the PSAR box. He picks up the southern skin of the dragon like a sniper type of a move. And so once again, make your circle smaller so I can see where inside this was it here or in here. That's 4 possible places those exits could be taken. he's trailing with the belly of the dragon. So I'm going to presume that he took it right here. And so that he's making this much gain. So he was able to keep what was there, and that looks like a 0.4 win. So take a look at Joe's rules and see if that's allowing you to get short in here. If that's an impulse trade, then that's a minus for you because that's not in his rule set. If it is in his rule set, then it's not an impulse trade. I am going to suspect that it's not in the rule set, though. I'm not offended by taking that shot. I mean, a breakout above the Z3, and you're looking at tech was strong yesterday, and this is the triple leverage tech. That's worth a shot. That thing could just as easily have given you that upward move that instead was a downward move. So I don't mind taking that shot. Next one, TZA. Now this is the triple inverse tech, and you'll notice that he does get the move in TZA that I looked at for TNA. So he actually does get that move. He gets the I'm going to assume he gets the PSAR flip right here. He's taken the southern skin of the dragon. He gets to no lose plus dinner for 2. On this one, especially if you thought that other one was an impulse trade, and you want to offset a minus 0.09, minus 0.9, then this becomes a 1, 2, 3. And then when it breaks below the low of the second bar, you would take the exit here, which is an improvement of that much against a risk box of that much. If this is your risk box right here, you're giving back almost 2R there. So although it gives you 1.6, I think that's given back too much myself. I like the COTA 2 entry. Again, I can't see where that's happened. It's probably here at the PSAR dot. And that gets paid a little bit. So for the daily total of 1.2, that's not bad work. All right, here's Tom's, some more work from Tom. Gap up. I'd like to see that inside here. You have that little break in the dragon and a resumption. That's kind of where your COTA 2 entry could be. And then that would still get paid at the PSAR dot. You got paid a little bit. You should have gotten paid a little bit instead of losing some. When it crosses the Bollinger Band mean and the VWAP is where I like to get short with that much of a box. I think you're waiting for a full frog box. I like going at half a box. No sense waiting. I'd like to see you get short here rather than here. And then I would be looking at this as my exit. I'd like to take that trade and get paid on this all day with a follow-on re-entry when it breaks through the dragon again and get paid down into here. This one, when this comes all the way down to about Z2 and then rolls up, you get a 1, 2, 3 exit right here instead of here. This is where the stop and reverse happens, which is fine. But I'd like to keep that extra piece and get out here. And then if it fails, I can re-enter pretty quick. But that's a good stop and reverse getting paid. Here's the COTA 2 because it barely breaks through and then reverses and crosses the dragon. So he nails it, gets paid. Yeah. Could you be short here? You sure could. You could also be short here on this second leg down with a tight stop to the VWAP, which would get paid here. This feels like a collapsing dragon off here. That's not bad. I want to at least scratch that. I don't want to lose money on that trade. Good stop and reverse. 1, 2, 3 exit. I'd be right here. You got to notice by this time that we're in this sideways chop. So on this little move back to the VWAP that starts to fail, cash a better win. This is a reasonable breakout above the VWAP. That's fine. Good preservation. A standard risk box would allow that to be much less of a loss. Still plus 2R net. That's pretty good. I'd look at entering at half a frog box over on this one. That one would make a difference. Still good work in getting paid to learn. Here's Joe with finding the mover in US Steel. He sees the gap. He gets that hybrid frog box off the low. It's rolling over. There's the P1. That's the RLXD, or the, RLCO, regression line crossover. The 10 crossing over the 30 outside the river. So he decides to take that and makes bank on 1.5. I would have been tempted here with a high and a lower high. When this crosses below the dragon, I would be tempted to be short in here with a stop up in here. That would have actually paid off. I would be very tempted on this one I see that as a winter that recovered, and then you get the PSAR flip. Would not have paid much until you get into this chop, but I would like this one on the short side. I would probably take that one too. So you'd have a marginal improvement on that one, or marginal addition. Not saying it's an improvement, it's because it's, if that's not your trading plan, but that's one to look at. Here's the S&P. Another daily total of 2.5. I like this one, taking the shot with a risk box. Good profit preservation, or capital preservation, because you're protecting against the move back down to close to yesterday's close. I'd like to see this one in here when you get that little dragon continuation and it crosses the VWAP. I'd like to see you get here rather than here. This was a break even that would have paid you a little bit. Maybe a little slow, we might get it, but you're so close to the VWAP anyway. I think that's really good. This would be the place here where you would consider a second position as it's rolling over and you're about ready to get 2R with momentum. And the reason to get the second position in, if you were going to do that, is we're going to come over to this resistance level and draw this across. It didn't really break down further. And once it comes down and rejects, this is a great cache of that position. This would also be an SSC. And then this one would be a CATA 2. And both of those trades would also get paid. But again, 2.5 for the day. Pretty good work. Pretty good day at work. So he's got, his little rolling update where we're at is just notice him quietly getting it done. He's got 80 trades in the bank and 41R net. So we'll take that. NVIDIA. Let's see. So there was a strong upward move, and then you get the P1 outside the river. You have the RLXD, the PSAR flip, the dragon rolling over, the RL30 rolling over. That makes this, as it crosses the VWAP, that's an owl entry to the short side. Boy, was that a nice trade. Now, once you see that harsh winter, it bottoms out. You get crossing the baby dragon, enters the dragon, crosses the dragon, takes out the PSAR, There's your entry. That's an SSC. Yes, a little bit late, 1 bar late. It would have been a fractional win instead of a fractional loss. This needs to be happening in here instead of here. This is the one you got to get. Then that exit gets paid instead of cashing a loss. Good trade. You took what was there. Maybe a bar late, but still not bad. Good scratch. I like this effort here because you've cleared both of those lows and you're looking for it to get down at least to this level. So this is an effort to come down to here. It doesn't work. So I'd like to maybe cover that here. So that's not bad. This is the one we got to get right here. Luke with the Aussie, here's 5R. On 5 minutes. He's playing the Z2 breakout. Doesn't work. Does a nice job getting short. Almost a 1, 2, 3 exit to get paid. Again, the gain is bigger than the routine loss. The gain is bigger than the routine loss. This is a great Kata 2. Bingo. Reasonable scratch, reasonable gain, fantastic stop and reverse at the PSAR. If you were ever going to add a second position, this would be the place right here. When this little routine up then fails and comes through the RL10, that's why I'm saying somewhere in here. Then I would go 1, 2, 3. Yep, that's pretty good exit. Great reentry. Yep, can't lose money on this trade. I would say, even if it's just right here, I'd rather have that than this. Great SSC entry, got paid. 5R, professional. All right, this is in Simon Property Group. Bottoms out. This would be the, somewhere in here, would be the SSC. I don't know what that pattern is. Oh, hybrid frog breakout. Maybe, I'm not sure I see it, but maximum favorable excursion. This would be a 1, 2, 3 exit right in here as it's coming back into the river, would still get you paid. So not much improvement there. This is a great short, but when you get down this far and then it comes back up to the VWAP, we got to scratch that one instead of losing half. When we had a favorable excursion of 1 and lost a half, that means we gave back a 1.5. So we got to get this, we got to get that exit, or at least that one. This stop and reverse to the long side is pretty good because that's looking like a Kata 2. When that fails immediately, I think I want you out in here. Although I understand why the PSAR is good. PSAR flip, I want you scratching here because when this doesn't fail further, this feels like it's just muddying around and it's not getting big breakouts and not getting big breakdowns. And then we can stay out of this chop altogether. SPG, remember, is not an index. That's a pretty narrowly defined proxy for commercial real estate. It's a single company. So if that thing is not crushing it, then it's just muddling through. So it's not going to give you if it doesn't give you those big moves right away, there's better fish in the sea. The Qs. I love this entry because we had a gap It did not close the gap, but reversed. And as soon as it crossed the dragon, you're in it. And then you're managing your stop up, and it gets a fractional. That's pretty good. That's not really given back that much. I like that. I love the short. I love the exit, and I love the stop and reverse. I love the effort. I like the stop and reverse. That was unfortunate. Let's try to scratch that. Still, net capture 1.23. That's pretty good work. It just didn't have much follow through today. Try this on 2 minutes. See how that works for you. It'll give you a little bit more. It'll give you a little bit earlier entry, in my view. See if that works for you. This one, here's our Z3 pinch. Or wait a minute, was this a timing thing? No, this was Z3 pinch. There's a breakout. There's something in here. I don't know what that trade pattern is. Unless it's playing a new high of the day. I like that short. Looking to get back to here as the first leg, and then the second leg. I would take the exit at the edge of the dragon. Can't see where the try on these trades. Try putting a box around it so we can it's a little bit easier to see where those stops and starts are. I like this short. I can see that one. A reasonable effort to get paid, but then when that rolls over right away, let's try to get short here. We'd probably scratch instead of losing, and then trying to get short again, we'd get paid. This one, that stop and reverse can happen here, or at least when it hits the PSAR dot. That's not bad. Pretty good preservation. I would have tried this one again. You probably get paid in there, but now when you got a high and a lower high, that makes this little crossover worth trading. If we're here and we get this right away, you got to scratch instead of taking that loss. I'm not sure what those trades are. And then we should be earlier on this one. And I think you're too tight in here. I mean, when this crossover happens and you got this dragging down, there was 1, 2, 3 losses in here where we should be making money on this. You're too close. You're pulling the trigger almost too close on that one. All right, that's everything we got on those. Yeah, I want to talk about this. There was a question in the room about what to do with gaps, and this has to do with hybrid trades. So I want you to look at everything to the left of the blue bar as daily bars. And so on this notional set of prices, we had an up move, it rolled over, harsh sell-off, and then a little bit of a rebound with half the volume or half the range that settled right into the middle. So standard practice for me would be to call that a critical state right in the middle. So I might do something like, hey, here's my little critical state. And now everything onto the right of that bar is I'm hybrid trading the next day. So what I want to see is a orderly move that opens where it closes. Let me see if I can get the annotation bar on this one. That would be nice. let's see if it's going to let me draw. Yeah. So where I want to see is that close. I'd like to see it open inside this tight range box. This is what I would call an orderly opening or little to no gap. So now what I want to do is I've set up this box as a breakout in either direction. So I want to get long or I want to get short, and I'm going to use this box as my execution risk. Now, if there's no gap, then I can actually, and it opens in here, I could get long one here. Then I come to the high and the low of the day, and I establish my daily range of yellow boxes. Now, if it breaks out above yesterday's high, I can add a second position, and now I'm looking to get back to the 10-day high. 10-day high, and I might be picking this as, increments of that initial execution risk. All right. Similarly, if it breaks down to the bottom, I could get short one here. And then if it breaks down through the low, a second one. And then if it breaks below the 10-day low, I might even think about a third position and then keep a piece as a swing trade. And now I'm looking to get these moves down to something like this was probably a 30-day low over here. This one might have been a 30-day high back here. So if it gets through the 10-day high, I'm looking to add a position here, playing for that next resistance level. So what I'm doing is I'm using trade architecture from the daily chart to set up the intraday. And I'm marking off places where I'm willing to add to swing positions based on the daily bars. So that would just be standard swing trading. These extra little things I'm doing inside the yellow zone of the day and the yellow zone of that critical state, this is all turbo intraday trading. These external places where I'm adding swing trades, that's like core positions. So I'm thinking of core and then turbo inside these little prices where I'm responding on 1 minute, 3 minute, 5 minute bars. Right. So that's what I do if there is no gap, if there's an orderly open. Now, what we know about the gap. Well, what about the gap? Well, what we know about the gap is if this was the close, and there's the break, this is where if there was no gap, it would open right here. But if it opens up here, then this distance between the close and the open is the gap. What we know is that the magnitude of the gap in either direction predicts the size of the follow through. All right, so let me talk about that. So if this was the close and then this was the open and that's the gap, and if this is the close of the day, this is the open, and if it closed exactly where it opened, then this zero line would mean there was no net follow through from open to close. So if we have a gap up, there's two possibilities. That thing is either going to close higher than it opened, or it's going to close lower than it opened. One of two things can happen. If it closes exactly where it opened, then we call that a positive gain of zero magnitude. Now, what we know from the study of the gap is the following, that the larger the gap, if that's the close, the larger the gap, so if it was a big gap, then let's see, like if that's it, then the larger the follow through, whether it's up or down, we cannot say. But the bigger this gap, then the bigger the follow through on average. We just cannot predict whether it's going to be higher or lower. What that means is that when you have overnight news that causes a significant difference between the close and the open. There was something in the news that put this thing into play. And the fact that there's a big gap means that the day is more likely to be volatile with a large follow through. The least probable event is where you have a close and then a big gap, and then it closes right where it opened. That's some kind of no follow through in either direction. That is the least likely. So you get a big gap up, you're likely to have either a big follow through or a big sell off, a large directional move. The bigger the gap, the bigger the follow through. And the same thing holds if it's a big gap down. This thing is now in play. That means more than just the normal market participants grinding it out. There's all this news that happened by surprise, and that news is causing people to reevaluate what they think is fair value. And then the traders come in and they start pushing this price all around, and then momentum happens. So big gaps lead to big follow throughs. That is a disorderly open. An orderly open would be where inside that tight risk box, it closed here and then it opened here. And then we get this orderly progression of the move of the day where we can add positions. But what if there's a gap outside? Well, this is where the concept of the hybrid frog happens. When I have a hybrid frog, the hybrid frog doesn't care anything about the previous day. It starts at the open and essentially takes this little minimum manageable risk box and simply brackets the open and says, if it breaks out of that box, I'm going to follow it and then try to get to no lose plus dinner for two. And then play for the large move of the day. So the hybrid frog is perfect for large gap move days. Why? Because it is non-directionally biased. It simply follows price. And if there's going to be a large follow through and we have a small hybrid frog box, then we have a fighting chance to get aligned with the big move of the day quickly. So if it gapped up, I'd put my hybrid frog box around it. Then if it moves up and then reverses to close the gap, I'm going to get my stop looking something like this, where I get long here, and then my stop is at the other side of the box. And as soon as I can get to no lose plus dinner for two, I can maybe capture a piece. Now I can either stop and reverse, or I can wait for it to take out the new low of the day to get short. And then if it makes a new low of the day, I'm looking for it to get back to yesterday's closing price, and my expected move is this. So if I have a small MMRB, then I can perhaps get that in the normal course of the day. All right. So the bigger the gap, the more I want to play a hybrid frog, which is a small minimum manageable risk box, bracketed, ready to go in either direction. If it's going long, I'm looking to get my stop to no lose plus dinner for two, and then quickly lock in that little piece, and then start using that little Uwe exit or whatever my management strategy is, so that as price is going up, I can keep locking in pieces until I'm out. Similarly, if I'm getting short on the breakdown, then my job is to take my stop and get that to no lose plus dinner for two as quickly as I can, so that I can lock in this little bit of a gain. And now now I'm using this stop to lock in pieces until the price hits, and then I capture that move. So the same principle that I'm using, I'd like you to think of this orderly opening as simply, that's what the hybrid frog looks like when there's no gap. And a breakout, I can get intraday long. When it breaks out above the high of the day, I can think about a second position, depending on what the size of this move is. I'd like that to be 2R plus momentum. The fact that it's taking out yesterday's high and continuing to go is the implied momentum that allows me to get a second position. So what I'm doing now is I'm using multiple time frames that multi-time frame, multi-lens analysis to start finding those price levels, which if they get breached, I might pick one here. I might, pick this one here, and looking at these as potential places of either resistance, and then bang, 2-hour battle drill to capture as much of that move, ready to re-enter if it resumes with a kata 2. So now I'm just using standard patterns of SSC, kata 2, owl, collapsing dragons, all of those to start chain trading right from the opening. So when I have a critical state, I'm expecting a large move in either direction. This is what I do with the orderly move: breakout intraday, consider adding a second position on the breakout of the high or low of the day, the mechanical entry, and then using standard framing techniques to figure out where support and resistances are and where the upside targets are. So if you read Glenn's questioning, that's what this is. That's the answer to this. That is technically hybrid trading. That's the idea behind hybrid trading, that we are combining daily bar framing, identifying critical states, and then using good intraday technique for core and turbo, that we're considering things like swing trade information, but also intraday things like frog boxes, and then the chain trading patterns that we teach. So you're getting the best of both worlds in the hybrid approach. Now, the hybrid frog rule set doesn't care anything about any of that. You just trade it with one position on the basis of that tight risk box, and then just manage the trade. But if you can do hybrid trading, you get extra information from the daily charts that are worth managing. Okay, so that's what I want to say about that lesson. And I uploaded a couple charts in Patreon that would that explains the idea behind green zone and yellow zone and red zone trading. Let me find that. So you can download this from the chart. So green zone and yellow zone trading. Again, what we're looking at here is if this was yesterday's candle, then in the yellow zone, between the high and the low, I can try to front run a green zone by trading in the yellow zone. I'm looking at the top and bottom of yesterday's range as provisional price targets. And if I can see a 2-to-1 inside the yellow zone, then I can trade intraday. And then think about adding a position once it gets above yesterday's high or the 10-day high, whatever that may be. I mean, this could be a weekly bar, it could be a monthly bar, whatever we're defining as our longer term time horizon. And then this on this side of the blue line is tactical trading. So when it breaks below the support level, I'm looking to be getting short in the red zone like a collapsing dragon. If it breaks above the resistance level into the green zone, I'm looking to be long. I normally think of this as an application with daily bars, but I've also done it with hourly bars, and I've also done it with weekly bars. But what I'm really looking for an orderly move that clearly breaks out into the green zone so I can be long, or breaks down into the red zone so I can be short. And then these words on a page, pages 2 and 3, will kind of lay that out for you in words, what I just said. Yeah, so green zone trading, mechanical trading once price moves above yesterday's range. So we're trying to find high probability payoffs, critical states from any of our swing patterns with mechanical entries. And then yellow zone trading is when I'm inside yesterday's range. Now, here's what will happen on that. If yesterday's bar was big, then that means the yellow zone in between the high and the low is going to be large. So if this is a large range day, then an orderly entry actually gives me room to get 2-to-1s between the high and the low of the day. But if yesterday was a tiny little doji, right, then the high of the day is here and the low of the day is there. There's not really enough room inside this to trade in between the high and the low. So we just wait for the breakout. Well, which is what we want. When it's a really compressed range, we don't trade in here. We wait for the breakout. But if it's a large range and it opens in here, we can put that hybrid frog box on it, and then we can trade towards the high or trade towards the low, and then look to add a second position if it continues, or to our battle drill if it starts to fail. So abnormally small is good. Abnormally large is good for the reasons of tradability. So that's what I want to say about the use of gaps, hybrid frogs, hybrid trading. That's our most advanced workshop, but that's the essence of that idea right there. Okay, so you can download that file from Patreon in the subscriber space. Okay, all right, that's everything I got for you today. We'll get this published and posted in the usual spot. Okay, thanks. Hopefully that was helpful. And we shall see you tomorrow. All right, hey Bill, I got a early one tomorrow, so I'm gonna hit the road here pretty soon. Unless you got anything hot for me.
Just I had sent you a text about maybe there's a way, because I don't know if so when calculating my actual risk box,
Yep.
because I modify the risk. I absolutely did the fire aim ready today.
Yeah.
Gap, so I went in and I got a 1% stop on everything as soon as possible, which was way too big. And then as the trade went, I closed the box. So when I do that, I think I'm getting errors. You see what I'm saying?
Here's how I generally approach that when I'm sort of doing visual trading. I will do something like this. Let's see if that resonates with you. So that this was yesterday's range kind of got really narrow and there was a little Z3 pinch. So we have this kind of little standard box.
Right.
And then there's a gap up and it runs up and then pulls back and then starts marching up. And I start feeling like, you know what? And here's where it opened. So here was the gap and it seems like it's holding right here. And it's holding right there. So the price pattern might have been like this. And it gives me some of this. And it feels like, oh, the upward urge is there. Here's that whole great big gap. That's the size of the non-directional noise box. So it feels like if this is the signal move of the day, I should be able to take this noise box. I should be able to enter here or not later than here, and then just hang this risk box either here or here. And my reasoning is, if, let me draw a red line in here just a second. That any price that goes below here or here is going to negate this upward move. That upward move's not happening if this thing rolls over through that box. So I try to use something like a standard risk box that is geared towards the standard volatility of this thing when it is non-directional. Now, if there was no gap,
Right.
and yesterday it closed in here and then opened inside here and then started to take off, and I can get long here,
Yeah.
then the risk box is obvious that if this thing fails through here, then this is not support, and that the downward move is huge. So where I'm placing the initial stop is simply a price that says that the hypothesis has failed.
It's still valid. Yeah.
Yeah, and then
Okay.
whatever that size is -1 execution risk. Now, whatever that size is, I should be able to see 2 units of reward to the upside. Otherwise, this move is not justified. Because of on day trading, when you have a large gap, the chance of this being a large directional move in either direction is so big that there's an implied 2 risk boxes of reward that's available. So you don't even have to worry about, is there going to be that big of a move? Yeah, there's going to be.
Yeah.
Because we know
that was my assumption.
the size, the maximum reasonable intraday move is what we call the range stat.
Right.
You'll see that on the charts. That's the average move of the last 30 days plus 1 standard deviation of the 30 days of range. And that's usually pretty large.
Right.
So
Yeah,
what we'd love,
when
go ahead.
when you had said, Home Depot is going to be $6.
Yeah.
I crushed Home Depot today. 5R
Yeah.
did 6.8, and I was out of trading by 11 because I had to go do my job. But
Hey, if you get 6R for breakfast, that's a good day at work. You don't got to stay there and give it all back all day.
No, I didn't. I
You know what I
left.
mean? Yeah.
No, I did. Before 11 o'clock, I had 15 and a half net R. And that was after, that's with the 1%, holy moly, everything's going, everything that I had targeted. I had 15 trades in an hour and a half.
Yeah.
So.
Yeah, that was Home Depot today.
Yeah, I got this. I got the first and the second.
Yeah. And then,
I got
that's,
I got a huge,
and now look, when that thing collapses, here's the thing to watch for, by the way, since we're on this chart. So here was yesterday's close, and then you get this big gap. Come on, mouse, work with me. So you get this big gap up. And so now you start working these moves to the upside. When this comes down and collapses through the VWAP, all of that upside goodness is sort of like ancient history. You can just say, look, this stuff is over. And now the hypothesis is the least surprising move would be a collapse back to yesterday's, this was yesterday's consolidation area right here. So now when it crosses the VWAP, you think it's going to go back, it'll go back to yesterday's VWAP. So you find yesterday's VWAP right there, and you draw that across, and you say, that is the least surprising move. And guess what else that looks like? The size of the move from the VWAP to the upside of the upside stretch is this. You also think if that thing collapses below the VWAP, it's going to go that far. So now you think it can easily get to here. Come on, mouse. You think it can easily get to here. When that collapsed, you then say, oh, well,
Position two.
let me try another one of those boxes. And now it gets right back to, it gets back to yesterday's support level. So the crossing of the V after the urge is up and then it's over, that's a new game right there. And now you project to the downside. Then when it gets down here and it doesn't violate, now you say, oh, well, there's a supported spring crossing. And then the target is right back to the VWAP. You think it's going to get to the VWAP. Then when it doesn't, and this starts stalling off, then your natural exit is here or not later than here. Because it didn't get back to the VWAP, you worry about this retracement. So that's sort of a quick check on architecture, but it's the crossing of the VWAP that matters. And then later, it's the crossing of the RL270, which is this one. That's the regression line fractal framework. And then look how important this support level was, the intraday support. When that breaks, when this comes down and breaks the VWAP and then breaks the 270, watch what happens now. The size of this move, the stretch from the RL270 to the maximum excursion of the RL10 is this one. And then you say, that's how far the traders can move the 10 from the 270. And now if it collapses, look how far down it goes, almost to the penny. So that's the symmetry of projecting price moves intraday. That geometry works day after day, just like that. Okay. So good work on that one.
Yep.
And yeah, if you get 6R out of this thing, that's a good day at work. You don't need any more than that. Although that would have been 10 and that would have been another 3.
Well,
just saying, but I know you had work to do.
So I missed that. I had that second leg down that I missed because I had to go to work, but
yeah,
I got the same types of things in Microsoft. I got 4R there, and I got it was
yep.
It was a 6.8R for me. So
yeah, so this one is nice.
When you were talking about,
yep, here's your gap, and now you get that run up to the high, and then it comes down, and then it holds. When it holds here at the open, now suddenly you get this, you get the crossing of the VWAP once again, and now you think it's at least going to get to, it's going to go up and test the high. And when that breaks out, you almost get another leg up, and then you get the sniper or the managerial exit there. And then when that collapses, you think it's going to the VWAP. And then if it goes through the VWAP, once again, you measure this distance from the peak to the VWAP. And then you say, if it fails there, how far does it fail? Right where you would expect it to. And then that acts as, so 318.50 is going to be an important price level for support tomorrow in Microsoft. Now, if that thing goes up above today's VWAP tomorrow, then that could be a nice big move tomorrow as well. Let me see what else it did the rest of the day. Yeah, no, just kind of mucked around. So I would be looking, I would want to see, before I get long on Microsoft, I want to see it get above 318.75. But if it doesn't, if it starts getting weak tomorrow, then what I'm looking at is something like this. If that price level breaks below 317.50, then it closes that gap, and the next thing it's going to go to is yesterday's VWAP. The target for tomorrow would be 314.50, and then I would be playing for a breakdown from here, short, and if it finds support, cover. But if it breaks out above, and especially above the VWAP, now I can be long, and then I'm looking for it to come back up to 323. So that's what tomorrow's range in Microsoft's going to look like. If market is strong and tech is strong, then I'm looking to see if Microsoft is following through, and that's the quick rehearsal for Microsoft tomorrow. Make sense? All right, man. Let me
All
run
right.
upstairs. I gotta take care of the dogs.
All right. I gotta go to sleep.
All right. All right, brother.
It was a long day today. All right, Brent.
Yep.
Love you.
See you
Bye.
tomorrow, fellas.
Good night, fellas.